Ben ritrovati un'altra giornata sul floor del New York Stock Exchange. Gli indici in questo momento sono in rialzo, manca una direzione ben precisa ancora una volta quest'oggi. Ne parliamo con la mia ospite qui sul floor, che è Doreen Mogavero, presidente, amministratore delegato e fondatrice del floor broker Mogavero Lee Co. Doreen, thank you so much for being with us.
Thank you for having me. I appreciate it.
So Doreen, we had a very weak start this morning. We are up again. We had some pretty worrying news out of Greece. I mean, a lot of people are still monitoring the situation over there. Moody's is about to downgrade some banks around the world, but the market is up.
Isn't that the way it's been? I think that all of the things that are going on have been anticipated to be going on. So I don't think anything is a surprise. The Moody's downgrading all the banks is a new, I think, a new sort of fly in the ointment. But it doesn't seem to be bothering the markets. I think that there's been a lot of talk about the banks in Europe and even in the United States being ready for any sort of collapse that we may see in any of these countries, and better able to handle them today than they would have been, say, 5 years ago. And that may be true, but still could have negative impact nonetheless. I think Greece is worrisome, not so much because of Greece. I think it's almost a foregone conclusion amongst traders that Greece will default, or at best the deal is not going to be great. And I think that is already something that's kind of in the markets, but the question is what happens after that and how do the European markets absorb that? That's still an unknown, and that's quite worrisome. Being up 65 points, I don't necessarily think is a complete rally. You know, we are hitting some resistance points.
500.
Yep, in the S&P. So I think that you're going to see a ceiling on it there. But stocks overall still, to me, seem to act very, very well.
And you were saying, even though a lot of people are now really considering the possibility of a Greek collapse, but we are still up. So you are saying that even if it happens, we might not see that earthquake on the market?
I think that Greece alone, the fact that they're going to or could possibly default, I don't think that alone will kill the markets, because I think people are anticipating that. It's how the market handles it, how the banks handle it, and the contagion of that I think is what everybody is going to be looking for. If they were to default, and if it were to look as though that the banks could not handle it and there were problems that were going to be caused down the road by it, well then I think obviously that's very negative for the market. Should it look as though that they are prepared for the collapse and it be handled well then of course that's a different scenario. So, and that's an unknown, nobody knows. So that's why I think that people are still approaching the market with some caution.
And we can say that maybe we can see some reaction this morning to some economic data. We had better than expected economic data from, again, unemployment, from the housing market. Even though we had a comment this morning from Ben Bernanke during a conference with the banking sector, he's been defending the policy of the Federal Reserve. Low rates are not good for banks, but they're needed right now for the economy. And again, he's stressed out the economic recovery is very slow. So we're still struggling between the numbers and between what the Federal Reserve is signaling. Really, QE3?
I don't know about QE3 yet, but I definitely think that the numbers are positive insofar as there is a trend in terms of the jobless claims. I think the numbers themselves are insignificant. They're so small in their improvement. The housing numbers, although they look a little bit better, when you dig a little bit deeper, they're multi-unit dwellings, so that are really driving that, and that's because the rental market is up so much and not necessarily because people are buying houses. It's because they need to provide more rental housing for people that can't afford to actually buy houses. Foreclosures, in fact, were up. So I think that the housing market and the job market both remain tremendous concerns in the U.S. I don't think that we are going to be out of this for a while, but the thing that I'm starting to notice is that people are somewhat discounting it. This is becoming our new normal. We expect it, we know it's going to happen, we know it's going to take a long time. The question is, what do we do in the meantime? We can't stop. So I think people are starting to put a little bit of money back into the market because they need the income.
And that's a little bit of a good news.
I think so. I just hope they're putting it in for the right reasons, that's all.
Thank you very much, Doreen Mogavero, for being with us.
You're very welcome. Thank you.